afternoon, ladies and gentlemen. This is going to be a beginner's guide on dividend investing. Stick around. Hey guys, welcome back to the channel. Anthony here. I hope you're all doing well and staying safe out there. I've got my afternoon espresso because I love talking about stocks and finance, and this gets my mind going, so I'm going to have a quick sip of this. That's incredible. I just wanted to say a huge thank you to every single one of you out there who have subscribed to the channel. The community is growing, and I love talking about finance and building financial freedom with all of you in the comments and the community tab, by the way. If you're new to the channel, please make sure you smash that subscribe button. Turn on that little bell notification. As you can see, I love documenting my journey with investing, be it through cryptos, dividend stocks, growth stocks, passive income, finance, business, all kinds of stuff. I love documenting my journey, and at the end of the day, I am building generational wealth here. So come along on this incredible journey. It would mean a lot to me if you can also smash that like button, because it really helps the algorithm. All right, so a little disclaimer, I'm not a financial advisor. Please do your own research and due diligence with all of this stuff. It can be extremely risky and volatile, and most importantly, I don't want to see anyone get financially hurt. That would be the worst thing. Please jump on the internet, jump on Google, obviously watch YouTube like you're doing now, Twitter, Reddit, Medium is a great blogging app that you can read about dividend stocks in particular, and just get confident, get knowledgeable, build up a little bit of an understanding of what this all is, and then make a decision once you are confident enough to jump into investing. So please, please, please do your own research. All right, so today's video is going to be about dividend investing. More importantly, it's going to be a basic beginner's guide to get started with dividend investing. Now, I'm going to show you a screenshot just now of my portfolio, and I use the app Stake here in Australia to buy stocks in the US. Unfortunately, we don't have apps like Robinhood or Webull. These are brokerages. You will need a brokerage to get started in the stock market. I know some banks here in Australia offer the ability or options to get started with investing via the bank, but they have extremely high fees and they charge on every single exchange or trade made. Stake does not do that, so this is the reason why obviously Robinhood is big over in the US and Stake is big here. So there is a referral code below. If you wish you're in Australia and you wish to sign up, please feel free to use that. If not, it's all good, but you will need a brokerage to get started. Now, I am going to explain what dividend investing is. I am a dividend investor, and my portfolio is sitting at $28,614.53. This is US dollars, by the way, and these are mainly made up of dividend stocks. The reason why I like dividends is because it is a huge form of passive income that can provide you with financial freedom forever, and your family and their kids and generations. This can continue to grow for as long as it possibly can. So this is the reason why I love dividend investing, and I've gotten started in dividend investing 2 years ago, and I haven't looked back since. Yes, I invest in cryptos, but dividend investing has been something that has always been there for me, and I've been building up to this level over the years. So it is an incredible way to generate passive income. So let me explain to you what a dividend actually is. So for example, if you were to buy a share in Coca-Cola, now I'm just going to be brief, I'm going to explain this in real simple terms. You don't have to be a genius to start in dividend investing, by the way. If you were to buy a share, one stock into Coca-Cola, and I'll pull this up for example. Let me look into Coca-Cola here, because I do hold some shares in Coca-Cola. I just want to show you as an example. A share of Coca-Cola will cost you $54.26. Because Coca-Cola is such a big company, they generate so much money and profits, a company can either reinvest those profits back into the company to develop technologies, or they can choose to reward their shareholders with a payment that is called a dividend. So it's a small payment based on the amount of shares that you own in that company. You get paid as a reward to essentially hold the share in that company, and that is dividend investing in a nutshell. You don't need to be a genius about it. It's real simple. You buy the company like Coca-Cola, and by holding that stock for such a period of time, you will then get rewarded with a dividend. Now, just to be clear, some companies don't pay dividends. One of the examples is Tesla. Tesla does not pay a dividend. That is a growth stock. This is a different form of investing, by the way. So you can choose to invest in dividend stocks, which pay you passive income, or you can choose to invest in growth stocks. Now, if we scroll down to Tesla, for example, let's have a look here. I'm going to show you this. A share in Tesla is $688.72 today. This basically is growth investing. So you buy the stock for example, at a cheaper price with the aim and the forecast to sell this stock at a higher price in the future. That is a different form of investing. Now, the best thing would be is to diversify your investments, be it through dividend investing and growth investing. So you can split up your investments in such a way if you so choose to do that. But today's video is purely going to be about dividend investing. So I've got my little points here. Now, so the best way to get started, obviously you need a brokerage, and then you need to start thinking about what dividend companies you'd like to invest in. The best way to get started with any kind of dividend investing is to think of products and brands that you know and that you understand. For example, Coca-Cola. This is a dividend paying company. Johnson & Johnson, they provide soaps and shampoos and medicines. That is a great company to get started in. 3M, they provide sticky tape or post-it notes. That is a great company. Or for example, ExxonMobil, they are a fossil fuel company. They provide oil and gas and so forth. So that is another dividend company. Something you understand is the best way to get started with dividend investing. Don't go investing into something that you have no idea what that company actually does or the product that they make, because it can get really confusing and it just becomes a mess. So the best way to get started is to stick with companies that you know and you actually use on a daily or weekly or whatever it may be, you use personally yourself, because you understand the product, you understand that there is going to be growth with that company over time and it isn't going to go away anywhere. For example, Coca-Cola, everyone is going to be buying Coke in the future. Everyone is going to be buying Johnson & Johnson. Procter & Gamble make toothpaste and shampoos and stuff like that. Fossil fuels, petrol, everyone's going to need petrol, so you'd buy ExxonMobil or Chevron, for example. Or the other one is a telecommunications company such as AT&T or Verizon. They are great alternatives as well for telephones or telecommunications, internet. It's always going to be around as well. These are the things that you should keep in mind when you're starting out with dividend investing. So you can choose to buy stocks such as that, as I've listed, or the other alternative is, and I've got my notes here, index funds or ETFs. Now let me explain to you what an index fund or ETF is. When you buy an index fund, you're essentially buying a whole range of companies. This is index funds and ETFs, by the way. So you are essentially buying the S&P 500. There are 500 companies in the US that are the top companies in the US stock market. When you are buying an index fund, for example, I'm going to show you one now which is very popular amongst people on Stake and obviously on Robinhood. We'll go here right now. This is VOO. This is Vanguard. So Vanguard are a huge investment firm in the US. There are many other firms, such as SPY. There's SPHD, which I'll show you that as well. There's BlackRock. There's all kinds of ETFs and index funds, but this is the most popular one that I personally obviously invest in, which is VOO. Now, you can choose to buy this, and basically it will diversify the money that you put into this stock across 500 companies. Now let me explain. I'll show you quickly. I've got Invesco here, but this is Vanguard's website. So this is Vanguard VOO. This is an index fund. So this is another form of dividend investing, but you, instead of buying one stock, for example, Coca-Cola, you're buying 500 companies. And it's incredible to see this, but so have a look at this. When you're buying this, you're buying 507 companies. Now these are all the companies right here. You've got PayPal, Hewlett-Packard, Welltower, Alphabet, Class A shares. You've got S&P Global. Keep going down here. I'm sure you know Johnson Controls International. You've got here Iron Mountain, Walgreens, Crown Castle. All these companies here, list just keeps going on. Amcor, you've got, let me try and find some big companies here that probably you may or may not have known. Let's keep scrolling down. Let's scroll down. Let's go to the next page. AbbVie, great medical company. T-Mobile, I'm sure everyone knows who T-Mobile are. Let's keep growing. News Corp, American Airlines, Under Armour, clothing brand. So it's all across different sectors and industries. I mean, you have so many different industries in the sector. You've got consumer staples, you've got energy, you've got consumer discretionary, you've got technology, Facebook, Microsoft, Google, all these companies you can buy when you buy into an index fund. So that is an alternative. A lot of people choose to do this because it takes the pressure off having to find individual dividend paying stocks. So Vanguard VOO is an alternative to an index fund. Also SPHD is another ETF essentially diversifying your money across a whole range of sectors, such as utilities. You're getting 17% in utilities. So you've got First Energy, you've got Dominion Energy, Duke Energy, Consolidated Edison, all these energy companies. You've got consumer staples. Now let me have a look at this. You've got Altria Group. They provide tobacco and wine. Philip Morris, tobacco. Cigarettes, Kraft Heinz, Walgreens, Kellogg's, General Mills. Information technology, you've got IBM, you've got Seagate Technology, you've got Hewlett Packard, Western Union, Cisco Systems. Let's keep rolling down. Communication services, so check this out. You've got AT&T, well that's a huge company. Verizon, Omnicom, Energy, ExxonMobil, Kinder Morgan, Chevron. Real estate, Iron Mountain, Hewlett, Health Peak Properties, Realty Income, and materials. You've got all these materials companies here. Healthcare, AbbVie, Pfizer, Cardinal Health, all these companies you can buy when you're buying an index fund or an ETF. So that is another way of buying a multiple amount of companies, but just in that one particular share. So the next point I'm going to make is the best stock for dividends. So it really just depends on what you're interested in, but to get started, I would personally start off with something like Coca-Cola, ExxonMobil, AT&T. These kind of companies are the best to start with. Now, what you want to keep in mind is that a company has what they call a dividend yield, and I'll get to that right now. So Apple, for example. Apple is a company that does pay a dividend. They are a growth company and a dividend paying company. Some companies don't pay dividends, some do pay a dividend. Apple, for example, does pay a dividend, but it also has the ability for long-term growth as well. And if you go, there's a chart with a 3-year chart you can check on your brokerage account. On stake, it's 3 years. You can see the price going up over the last 3 years. Now, I currently hold 3.7 shares of Apple, and obviously I should be buying into this more, but I just want to explain something here. There's a dividend yield down the bottom here. You can see this when you look up on dividend paying stocks. The higher the dividend yield, for example, the more riskier the dividend is going to be. Now, I say this because when investing in dividends, it does come with a form of risk. The risk is the company, for example, ExxonMobil or the airlines actually are a great example, like American Airlines or Delta Airlines, for example. They lost profits and revenue because of the pandemic last year. They had to cut their dividend because they didn't have any money coming in basically into the company. So they had to cut that dividend because they couldn't afford to pay the dividend to shareholders. So once a company does that, that's the risk associated with dividend investing, because they can cut the dividend payment coming out to their shareholders. This is the main reason why people suggest diversifying your portfolio in order to prevent this as much as you can, or to basically mitigate your risk by diversifying your portfolio. So if a company does cut its dividend, you're not going to be left stranded. So now let me get back to this dividend yield. So as you can see here, Apple has a dividend yield of 0.65%, which is extremely low. And the reason why they do this is because they are choosing to invest those profits that they make from the consumer back into the technology of the company, therefore giving them the ability to grow the company further and grow the technology, as we are all using Apple technology now. So they're consistently growing and updating their technology, and they're using those profits to do that, which is completely understandable. And obviously being a tech company, they need to do that. So you can choose to invest in low dividend yield companies such as Apple, or high dividend yields such as ExxonMobil, for example, and I'll show you that in a minute. But one thing you've got to keep in mind is the average wage that I personally choose to go for, being at my age, at 32 years old, I would like to get the benefit of the dividends, a higher dividend yield, because it will pay me more money a lot sooner. Whereas someone that is a lot younger than me, in their early teens or mid-teens, early 20s, mid-20s, you've got the benefit of time. And the reason why I say that is because if you've got the benefit of time, you can therefore grow with this company over the years. So you've got a lot more time to be a dividend investor and to invest in lower dividend yield companies. Now, this is the thing. If you start early with dividend investing, you can benefit dramatically. And I'll show you this in my dividend tracking app in a moment. So dividend yield that I choose to go with is around the 2 to 5 range. Because of my age, I am looking to get more dividend income in sooner rather than later. So I choose to go for 2 to 5% dividend yields. And I'll show you this now. For example, if we scroll down to a dividend company called O Realty, this is a great starter, by the way. it has a dividend yield of 4.17%. So this is ideal. I currently hold 25 shares of O Realty. This is a great dividend paying company. They are a REIT, a real estate investment trust. So when you buy this, you are effectively buying real estate without actually having to worry about changing air conditioners, door handles, leaking taps, all that stuff. You are buying the company that runs the real estate themselves. So this is a great option if you wish to start out investing as well. So O Realty, now it has a dividend yield of 4%. Now let's scroll all the way down to one of my biggest positions in dividend investing, which is ExxonMobil, and they have a dividend yield of 5.52%. So this is getting up there above the 5 mark, so it is getting quite risky. This at the height of the pandemic last year, it was very high. It was almost a 10% dividend yield, which would have gave a lot of investors a heart attack, because that means that the company cannot sustain the dividend, and that would potentially mean that they would cut their dividend. But thankfully, ExxonMobil didn't cut their dividend, so that's a good thing as well. But basically, that is dividend investing in a nutshell. So you don't need to be a rocket science, you don't need to be a finance expert to understand dividend investing. It's just really simple. Just pick the companies that you know and obviously use to get started. Coca-Cola, Colgate, Procter & Gamble, Johnson & Johnson, 3M, sticky tape. I mean, that's basically it. That's all it is. Now, the other form of investing obviously is hype stocks. Now, I'm just going to touch on this quickly, but this is not dividend investing, but hype stocks. AMC, you've probably heard it in the news. AMC, GME. This is one of them here. So AMC was part of the Wall Street Bets community. This is a hype stock, so people are betting on this. It's not something that I recommend dividend investors take on unless you're willing to take a risk. I did take a risk on this. I bought 17 shares at $8, and thankfully it's paid now $58 a share. So I've made $840 on my money. This is a risky investment, so please, please, please be careful with this stuff. Don't go jumping into hype stocks like AMC or GME, which is GameStop. A lot of people lost a lot of money because of this. This is not dividend investing, so please just set that over the side for the moment. Get confident with dividend investing. Don't jump into the hype coins or stocks, like AMC, GME, Nokia, BlackBerry. All of these companies are extremely risky, so don't jump into that just yet, just until you can grasp dividend investing. Right, so other than that, guys, I'm just going to quickly show you what the power of dividend investing actually is. So as you can see here, this is me 2 years dividend investing. This is going to require a lot of patience, commitment, and dedication. I'm now sitting at a dividend income of $1,199.75 AUD. Now, this is Australian dollars, by the way. I'm sitting at now $99.98 a month in dividend income. Now, think about that. Dividend income can really generate you income, so you essentially over the years you don't have to work. You can just solely rely on your dividend income once you hit that point, obviously. It's incredible to see how quickly this money can compound and grow over time with consistent reinvesting when you can. Obviously, it doesn't require tens of millions of dollars. You can start with $5, $10. I know with Robinhood you can start with as little as you possibly can to buy your first dividend paying stock. So this is a really good way to get started. My yield on average is 4.42%, so it's in that range, as I said, between 2 and 5%. Now, obviously today I'm going to be receiving a dividend from SJR. These are the companies that I've invested in that pay dividends: SJR, VTI, and VNQ. These are some companies that pay dividends, which is great. Oh, I forgot to mention one thing, most importantly. Dividends are paid out by a company either monthly. Some companies pay monthly, so every month, either mid-month or at the end of the month, they pay you a dividend. Some companies pay quarterly, so that is 4 times a year. And some other companies pay once a year, which is very rare. I know that Disney paid an annual dividend. However, they cut that dividend because of the loss of income and revenue that they had. So monthly, quarterly, and yearly. So that is monthly, 12 times a year you get a dividend, quarterly, 4 times a year you get a dividend, or yearly, once a year. So that's basically it for that. My top 3 dividend payers are ExxonMobil, paying me $398 a year. SPHD is that ETF index fund that I was explaining, $135 a year. Prospect Capital is a finance company that is very risky, and just while I'm here, I'm going to show you how risky that actually is. And I'm just going to show you here, Prospect Capital sitting at $8 a share, and they got a dividend yield of 8.21%, which is extremely high. So this is really risky. They can cut their dividends if they wish, and this is the reason why it's very risky for me. I've held this company for a long time. I haven't bought any more shares, and I've made $405 USD, so that's pretty good. I'm quite surprised at this stock considering how high the dividend yield is. So risky dividend company as well. So try and aim between 2 and 5 if you can. All right, so back to this. As you can see here, I've set myself a goal to get now $20,000 a year in annual dividends. So that is my goal. I've reached 6% of that, now $1,199 a year. It's going to take me some time. I will need to invest $425,000 into this portfolio in order to generate $20,000 a year in annual dividends. It's a lot of money. It's going to take a lot of commitment and a lot of time and dedication, but I will do it. So you can see here, this is a great app, by the way, and it's available on the iOS store. I'm not affiliated with them, but check it out if you wish. 33% of my dividends come from energy and minerals companies like ExxonMobil, gas companies, that kind of thing. That's where my dividends come from, most of them anyway. Dividends receivable this month, so I'm due to receive $45.85 this month. So that's what's coming in to my dividend portfolio. And I'll quickly show you my portfolio here. It is valued now at $37,672.31 AUD. That is Australian dollars. I've made a total return on my money of $10,550.31, which is incredible. The percentage I've made is 38% on my initial investment. So you can see there, I've invested $27,000. I've made $10,000 of my money. Then that is just mind-blowing when you think about it, just to see how money can actually grow. And more to the point, the most powerful thing about dividend investing, and I'm about to get to the cherry on the top right here. And if you're here with me, thank you very much. I appreciate it. Smash that like button and hit that subscribe button. This is the power of dividend investing and compounding over time. In 10 years, my portfolio will be worth $56,989 Australian, and it will generate me $3,910 every single year. If I just completely stopped, didn't put any more money into this, this is what it will generate on its own. This is self-moving here. It's like a train. It never stops. It just keeps growing. Money keeps growing with dividend investing. This is why I love it. Now, if we go to the 20-year chart, how good is this? Have a look at this number. It will generate me $20,742.95 every single year in 20 years. If I didn't invest anymore, just reinvested the dividends. This is the most important thing that I forgot to touch on earlier. You must reinvest the dividends. You cannot touch that money. You must stay committed and reinvest that money back buying into stocks. When you get that cash payment, you buy another stock into Coca-Cola, you buy another stock into ExxonMobil, you buy VOO, you buy SPHD, you buy AT&T, you reinvest the dividends so you can grow your money. This is the whole point here. You've got to grow your money. The portfolio would be worth $177,000. That is unbelievable in 20 years. If I didn't invest any more money, it will grow to $177,000 in 20 years. Now, I'm hoping this is going to be a lot more than that because I'm continuing to invest on a regular basis, be it weekly or every 2 weeks or every month. Doesn't matter. So long as you're investing consistently, that's all that matters. So that is the power of dividend investing, compounding interest, buying great dividend paying companies that you understand personally and that you use every day. This is what can happen with dividend investing. This is why I love it, and it is growing every single week. There's the proof. All right, so I just want to say a huge thank you. If you've stuck around this long, please make sure you like the video and subscribe. That is basically dividend investing in a nutshell, and I hope you may have picked something up from me that you may or may not have known. Leave me in the comments below what you think about dividend investing and if you're going to start. So stay safe out there, guys. Happy investing. Peace. Bye.